Hi, welcome all of you to another video from Knowledge for All. In this video, we will go through advanced accounts payable questions and their answers, which are repeatedly asked in the interviews. We have already made a video on the basic accounts payable interview questions and their answers, and if you have not watched it, please look into the description box for the link. Without wasting a single moment, we will go through the video. Accounts payable cycle. Accounts payable cycle is a series of processes which involves purchase and payment departments. This includes all the activities from placing an order to suppliers, purchasing goods, and till making payments. Accounts payable cycle, also known as procure to pay or P2P. Two-way matching versus three-way matching. Two-way match is used to compare the invoice received from the vendor with the purchase order. Three-way match is used to match the details of the PO, goods receipt or GRN and vendor invoice. Quantity and price are the details which are matched in both the cases. PARC report. PARC report is a SAP report of documents entered and stored in the system due to incomplete process without carrying out the extensive entry checks. Direct debit. Direct debit is a payment system in which the company authorizes the supplier to take funds from his bank account every month for the relevant amount automatically. An invoice is sent then to the company that matches the amount requested to the bank. Billable versus non-billable expense. Billable expense are those expenses incurred by us and on behalf of the customer in performing the duties or services and supply. These expenses are recoverable from the customer by way of billing. Non-billable expenses are expenses incurred by us for carry out our own business duties or responsibilities. These expenses cannot be billed against the client or vendor. Debit balance recovery. When payment is made to a wrong vendor or payment made in excess, in that case our payment has gone to the vendor. So for us it is vendor debit balance. The debit balance recovery is usually made by raising a credit memo for the regular vendors. However, if there is no future transaction from the supplier, we ask the vendor to send the check or make an EFT payment to us. Procure to pay journal entries. Purchase requisition and the purchase order does not have a journal entry because of there is no business activity. Journal entry for goods receipt is inventory receiving account debtor to accrual or goods clearing account. Journal entry for invoicing is accrual or goods clearing account debtor to supplier's liability account. Journal entry for payment is supplier's liability account debtor to bank clearing account. Aging schedule. Aging schedule is a tabular representation of all the bills and invoices along with their respective ages, that is, the date on which these become due. Performer invoice. A performer invoice is an abridged or estimated invoice sent by a seller to a buyer in advance of a shipment or delivery of goods. It notes the kind and quality of goods, their value and other important information such as weight and transportation charges. These invoices commonly used as preliminary invoices with a quotation. Accounts payable turnover ratio. Accounts payable turnover ratio is equal to net credit purchase divided by average accounts payable.